let's get started with the news of the day. Rupee has hit a record low of 89.48 against US dollar as the greenback strengthens amid lower odds of a Fed rate cut. There were reports that Reserve Bank of India also intervened during the day, otherwise the fall could have been even higher. However, there has been so much of buying of dollar during the day as per traders. But to get a sense what actually is weakening Indian rupee, we have two eminent guests, 𝗕𝗿𝗄𝗽𝗏, founder IFA Global, and brilliance 𝗕𝗿़ Sanyal, chief economist and head of research at Bandhan Bank. Gentlemen, welcome. Good evening. First question to you, Mr. Sanyal. Do you think economy is a reason for this?
No, on the contrary, I would say fundamentally Indian economy is actually on a pretty solid footing. We have a pretty decent growth number, and some of the other historically most usual cases of spoilers like high inflation, high current account deficit, high fiscal deficit, none really exists. So we are actually in a situation where we have decent growth with low inflation, low twin deficit, manageable debt levels. So fundamentally, we are actually on a pretty strong footing.
Definitely, fundamentally, the numbers are showing, the numbers are even better than what was anticipated and forecasted by the research agencies as well as Reserve Bank. But what has led to this rupee fall? Mr. Goenka, what was today's reason according to you?
The data is all good. In fact, inflation numbers are so great. And oil is at 6. And one very important metric that we track is the real effective exchange rate. And with the recent depreciation of rupee today, I think the real effective exchange rate is close to around 96.5, 97. Now this used to be 107. That means in the entire dollar weakening that happened in the last 1 year, rupee did not get strong at all. So RBI actually went on and overcorrected this. But now the situation is the reverse. So ideally rupee should have been at 87.5 and we are at 89.5. In fact, with regards to Chinese yuan, I think we have depreciated a lot. So I would say the only couple of things which are against India right now is, of course, no clarity with 100% probability on the trade deal. And second, I think RBI is short, and the market knows, close to $70 billion in forward positions now. What we understand out of this today's move, of course, there was no news. The only thing that what we are speculating is that 88.80 was a level that RBI was protecting for very long. And time and again, the market was heavily long on the long US dollar trade. And because exporters are kind of not very active in the market because there's no clarity on the trade deal yet. So any exporter which used to sell 100 million is now selling, say, 50 million. So automatically the sell side trades have reduced. And this time around, I think because the US rate cut expectations has reduced because no data is coming out of America, and the US dollar is getting strong, and there is tremendous pressure on the dollar long side. I think RBI let it go. And in the NDF markets after the closing also, we saw rupee quoting at around 89.60. That means RBI is keeping some ammunition so that they can intervene heavily at higher levels, because the US dollar in short term is also getting strong. Otherwise, as Siddharth was saying, everything is great from an economy perspective. I don't see any problem there. Ideally, rupee should appreciate with inflation numbers so low. Let's hope for the best going forward.
Definitely hope for the best. So you highlighted three quick reasons. One, of course, dollar is strengthening, no clarity on trade deal, as well as the hope for US rate cut is now waning, kind of a thing. Siddharth, I want to understand from you one about the trade deal per se. Now, this is something which we don't have answers yet. We have heard many times that the trade deal is about to get closed, but of course, that clarity is yet to emerge. In that scenario, How do you see rupee weakening from monetary policy point of view?
In terms of the trade deal, the expectation, you are absolutely right. There had been phases where expectation really built up, and there was an expectation that it can actually be announced fairly soon. But eventually, we haven't really seen that. So it might, I think now market is adjusting to the expectation that most likely something not so unfavorable will come. What will offer markets and Indian markets some bit of relief or cushion. But the timing is little uncertain. It might still take a few more days or a few more weeks. I think market is preparing for that. And occasional phases of volatility in rupee also carries the effect of that particular uncertainty to a pretty significant extent. Having said that, I think market still believes that at least the additional tariff that had got imposed, that will largely be reversed. That will be the outcome people are looking. That's kind of the baseline expectation people are getting aligned with. So either way, a big deviation will actually have some bit of an impact. But at this moment, the lingering uncertainty is causing quite a bit of, weighing somewhat heavy on INR. Having said that, I'd just like to highlight one particular factor. Typically, over a period of time, even though given that we are a current account deficit country, over a period of time, you would expect the currency to weaken slightly, and we have some kind of a pace, natural pace at which we weaken these days. Now, if I look at about last 1 year, the weakness had been 5-6%. But including that 5-6%, if I see, for example, the last 3 years, the number will go to something around 3%. Now, while the 5-6% looks slightly on the higher side, the 3% on an average or some kind of a CAGR kind of about 3% over the last 3 years sounds very usual, no abnormality there. I think we have to see that holistic picture as well and keep that in mind.
Right. Abhishek, when you're saying you're hoping for the best, what is your expectation now as far as rupee trajectory is concerned?
So as Siddharth was saying, we depreciate around 2.5-3% on a long-term basis. Now, the only thing which has changed for India is that our current account numbers, which used to be around 2.5-3% of GDP now, that has been improving every single day. And very soon, possibly will become a BOP positive country. So, and inflation is very much in control. So I think there's no reason why the gap of inflation between India and US used to prevail and we used to keep depreciating. I think sooner or later, the currency will start getting stronger. Maybe not now. Still, the RBI wants a weaker currency, as we can see from the policies. But maybe next 3-4 years, maybe we can see those days. One very important point that we need to see is that we have not been attracting FDI and FII flows. And for a very, very long time, our FII flows have been historically at the lowest levels. We can't go below it, hopefully. And with Indian valuations also correcting, and recent earnings numbers, especially in the mid-cap category, have come out to be good. So I think sooner or later, if we start seeing some risk aversion outside, and since Indian markets had not moved up when the other Asian emerging markets, American markets were moving up, so we have anyways underperformed. So now I'm just thinking from a foreign institutional investor, if rupee is at 90, say we have got 4-5% depreciation, valuations get lucrative, and earnings starts improving. If that's the situation, we'll suddenly start getting a lot of inflows, and already we are seeing in the overall breadth, Nifty is going up and the other markets, other stocks are not going up in the same fashion. So some signs are coming in that the flows might also start. Interestingly, what's likely to also happen is the bond index inclusion, which can give us $20-25 billion. That can happen before maybe budget. We don't know, but that can bring in more flows. So I think if my real effective exchange rate is close to around 96.5, 97, anyways, I have a cushion of 3% from a fair value basis. And even if I am assuming that it should be at 100, 3% anyways, we are undervalued. So at 99, I mean at 89, 89.50, I think if rupee comes to around 88, I will not be surprised.
All right, so 88 is the level which may come as per Abhishek Goenka. Siddharth, one last point I want to take from you, as I was discussing about the monetary policy impact. Now, this is something, if I remember, the MPR was projecting 86 as far as their forecast is concerned. How much of the impact this will have on the policy front?
Well, textbook answer is that if the rupee is weaker in case of a net importing country, you will add to a little bit of additional cost, leading to some bit of additional inflation over a period of time. But we are having this discussion at a point in time where inflation is some kind of a multi-year low, close to almost zero at this moment. Eventually, over the course of the next few months, it's likely to go a little higher to maybe, but still significant, just in the lower band of the RBI's comfort zone. So I don't think too much of a difference is coming in just because of this particular factor on the inflation side. On the growth side, it might actually offer, theoretically, it might offer a little bit of additional competitiveness. But I think some of the other factors which are weighing on the overall external sector focused growth, those factors are really, really overpowering the uncertainty, the trade-related negotiations. They are really overpowering factors. So at the margin, this particular thing at this moment in the near term doesn't really shift the needle dramatically. So my sense is that the RBI or the Monetary Policy Committee will look through this kind of short-term volatility, which is being caused not so much by fundamental factors, but because of transient factors or international some of the factors which are causing this volatility. I don't think this will shift the needle too much for monetary policy as such in the near term.
All right, that's a view which is coming in from Mr. Sanyal and Mr. Goenka. Thank you so much for taking out time and joining at this hour.
Thank you. Thank you. Have a nice day.
With this, it's time to move on